Joining us now, though, we've got Samir Arora, founder and fund manager at Helios Capital. Samir, as always, a pleasure having you. And at the start, season's greetings from our family to yours. But let me ask you this. You sit outside India and you look in, you of course visit often, but I'm just curious what the opinion is. Do you see flows turning durably? Off late, the last couple of weeks, we have seen some bit of short covering play through. But is that a sign perhaps that the tide might finally shift and the flows might finally shift towards India's capital markets?
Well, definitely, although the flows have not started, but the outflows have stopped for sure, it looks, because even when there are these negative days, the numbers are quite small. And otherwise, over the last 10, 12 days, they've been 0 to plus. So I've been thinking for the last 2, 3 months that will happen. And maybe now they are waiting for this trigger of India-US deal. And also the fact that India's underperformance against emerging markets is too big and a record difference of nearly 25, 27% in just year-to-date terms. So I think it'll happen because A, FIIs in general keep getting money. B, in general, FIIs invest in India. Other than if there are specific events. In India, the one big event was the fact that we had this capital gains tax in 18, which sort of changed it. But by now, whoever has accepted it has accepted it. And therefore, from a base point of view, all these things are old news. Plus the fact that the FIIs, also not just FIIs, that investors in general are allocating to non-US markets. In that case, it can't be a realistic scenario that the world is investing outside US and we are still having outflows. But let us celebrate them slowly. First, let's celebrate if they stop selling. That would be a big help. And then they will come back plus minus, I think. A few
All right.
weeks, months.
So then the question arises, Samir, not just in our market, but in markets around the world, one of the factors that seems to be playing out is concentration, because the stories get bought into ultimately, and there are pockets of strength. Relatively speaking, where are you seeing opportunities then? Because a lot of people are saying that there are limited pockets where there is still opportunity to buy, and whatever is doing well is a little expensive at this point.
Within India, you mean? Okay.
Yes, within India.
Once they buy, I would think that I'm saying let's forget about buying. Let's say they stop selling. That itself is a big highlight. So let's go in order. So what they are selling is obviously what they own or owned. And in the past, all these guys would have owned larger financial banks, that is, and maybe other finance companies. They would have owned IT, and they would have owned large consumer companies. And you can see that in the fact that when they were selling, these were the things that were being sold. And instead of, even though they were selling this, at the same time, the FIIs were slightly trying to shift the portfolio by buying the newer age companies or QIPs or smaller companies, maybe changing their portfolio by 1 or 2%, which is say $10 billion a year. So if they were to stop selling or buying, first thing would be that the larger caps would otherwise do well or do better than what it is doing now. But that would give confidence to the domestic fund managers to be more aggressive on mid and small caps, because the flows in India come into mid and small. But if the fund manager feels that the large cap market is under threat or weak or may fall, then it is very difficult for them to become more bold. So I think in the end, mid and small will do better, but that does better when the large caps are not falling on your head. And so even though it may look that this is cheaper or more expensive, in the short term, you can justify by saying that I am only buying 30 companies and these 30 should not be aggregated with the overall market. So all those stories will continue. In the end, once the FII comes, I think mid and small will outperform large cap. Because when they go out, the large caps fall, and then mid and small being higher beta fall even more, and not really related directly to valuations or anything, but just the fact that they are a multiple of what happens to the large cap.
Well, Alex, the question then therefore always comes to mind is, Kaun Chotu? And the reference to it is...
I am not saying it for that fund because I have much bigger AUM in my other funds, which is dependent on large and mid. But you can see that in our flexi cap category, where we have the option of doing whatever, and 50 some percent would be large and the rest is mid and small. I think the fun part is in mid and small, but the large one is needed for stability and
Yeah.
12%
Liquidity
compounding or
as well.
something like
Yeah,
that. But
liquidity.
Call Chotu is a good product.
It's by the way, it's a lovely ad as well, Samir. So kudos to
So
the
please
team. which did
explain
it.
to the others who have not seen my ad what it means.
No, I will explain that too, and then I have a story about the spectacles that Samir is wearing as well.
Yeah.
But okay, since Samir has told this to me, the explanation viewers of that ad seems to be, to my mind, is that there's a young guy who comes in and pockets a coin on a carom board, and people say, the gentleman says, "Wah Chotu," and that guy says, "Kaun Chotu," in an act that, boss, I'm no longer a kid.
Yeah.
Because I've arrived in life, and that is what small caps will do in India. Did I get it correct, Samir?
Sort of. Even I don't know beyond that.
Achha, okay.
I mean,
It looked like a good ad that we had.
if it's 20,000 crore, then kaun chotu, yeah?
Yeah, Kaun Chotu, exactly. That too. But okay, Samir, very quickly before we move back to the markets, folklore has it that Samir Arora loved the specs of a fellow colleague, and Samir Arora went to the exact same store, did a video call with that colleague, and told that guy, okay, see, my colleague has bought, now give me a discount as well. And he bought these specs. Is
And
that
I
true?
bought 3. My third one is not ready because I need to change the glasses and all. But the thing is, because by chance I happened to be in the same city, and then I found the store and I could guess that this is the store from where Mr. Irani bought.
But is it as lucky for you as it seems to be for Mr. Irani? That's the question.
We are all joined at the hip.
Yeah, we are. Okay, Samir. So the question, the other thing that came into a couple of FI conversations that we did was that after this period of underperformance, and if indeed the dollar were to kind of have a mean course correction, then flows they believe will come into EM funds and to their funds as well, which they would want to now increase allocations to India. Is that a fair argument?
So you might say if dollar has a correction relative to rupee, rupee then, because the dollar is anyway been weak.
Yeah.
So if you say dollar will have a correction, I thought they mean dollar might strengthen now suddenly, which would be negative.
No, I didn't mean that, no.
Yeah. So even the rupee should strengthen a little bit in that sense, because the sad part has been that the dollar has been weak against everything, and the rupee has been weak against the dollar, which has been the sad part, and that actually has been a bit surprising. But maybe it can't be only related to FII flows. I don't know, but in general, because that is not such a big deal alone. But in any case, I agree with you. What we say differently, we say the same thing in different way. That previously the Indian market, that is earnings and index and ever, was growing at some 14-15%, and then we would promptly lose 3 to 4% per annum on currency. Now the market earnings, because of nominal growth rates being low and maybe one sector IT growing at 5-7%, the earnings growth will be 12-13%, but you should not lose, or maybe lose plus minus 1% on currency, so you are as good as before. I think the bigger story is not just our rupee doing well, but in general, the starting point will be that our underperformance is too stark. And our overall performance, as in of India, has been very good. Even with this 1 year underperformance, for the last 5 years, India would have beaten all these markets. It would have beaten emerging market index, China index, everything, which includes this 1 year of nearly 28-27% underperformance. So people can't forget that and say this is the new normal. So you will get back the money, I think, anyway.
Got it.
Also, because the world, while moving away from US, is not finding it that, I'm doing it for some longer term reasons, that I don't like the current administration or I don't like their policies. The reality is that the rest of the world is outperforming US, which people focusing on the US do not realize, because the US market seems to be doing well. The US market is up some 13-14% this year, and the world ex-US is up more than 25% in dollar terms.
Yeah, that's true. So, Samir, you reckon that, because one can also argue that, while financial markets are what they've done, gold has been the star performer, and therefore asset allocation conversations come up very easily when gold does so well, right? My question to you, therefore, would be that if, as you look forward to summer 2082, You reckon that Indian markets could be in the top quartile of performers, accompanied by maybe gold or not, accompanied by other markets or not? Can Indian markets do that?
We can only say that in itself, it should give 12-14%. By the way, even now, even this year has not turned out to be so bad. Even if you look at the index for last 1 year, I was just saying before coming. So, for example, our flexi cap, and it's not some vastly different from others, but it is up some 10% in an exact 12-month period. And that is the normal expectation from now in rupee terms, that for the next 1 year, you may make 13, 14, 12% type of return. And then either the earnings pick up or the flows pick up during this period sometime. So for that kind of return, your way to look at it is not to say that whether you're in the top quartile, but that whether you will have a regret. That means an Indian investor will say, oh no, instead of market equity, I could have done fixed income, I could have done some balance fund, I could have done FD, or once in a while something else. And for the foreign investor, it should be that instead of India, I could have stayed back in US. You can't say, oh, India, I could have gone to some Timbuktu because Timbuktu did better than India in that period because it was not in his day-to-day universe. From that angle, I think India will do well. And actually, it's just that these 2-3 other markets have done too well, Korea, Taiwan, and China. And that also is not normal to be up 70-60%. Like Alibaba is up some 80%, all those things can't be. So you'll be broadly okay within yourself, and whether you're in the quartile or 30%, you will be up and not have any regret. That is, the investor should not have too much regret, and then that's what you can see. We can't say exactly what other markets will do to make us in the first quartile. So I have one famous means I make it famous. I have one line. For us to outperform, others have to underperform. Yeah. Right? But whether the others will fall 75, who knows? I think we as in India can go up 12-13%, which I think otherwise is not a bad number to hope for.
You know, I wish this for my viewers. If they say something, they can say what Samir Arora says. It's famous because I make it famous.
No, but it's true.
It's true.
I have the Twitter platform to make these things.
And Samir does make things famous.
Yeah,
he's just
true.
being too modest right now.
He is. But Samir, if I look at your FlexiCap fund, which is, it's your blank canvas fund, and it kind of reflects how you look at the market, right? So I look at the sector allocation, and I know that it's not necessarily indicative of the way that you build your portfolios, but it just reflects the fact that you seem to be playing that consumption theme, right? You have a significant allocation to finance and banking, you have auto anks and auto, you have retail, you have hospitality, and you have realty. So all in some form or fashion or the other have significant bearing on consumption. Is that how I should read it?
No.
No. Okay. So
it was all individually done with an eye only on the fact that you are having some big picture idea of, okay, this far we have gone. But we didn't start by buying, like we, forever all our funds own Phoenix Mills and all. It has been owned well before any story on GST or anything, just on this big picture thesis that who knows which sector will grow and who knows which company will grow, because there are so many unlisted companies, foreign companies, but you just get a play like that. So you can call it consumer forever kind of thing. But normally when we change our weightage, that is more associated with some current event. And so 80-90% of the portfolio is what it has been for a long time. And 10-20% may change because you are thinking of GST cut or interest rate cut, or somebody saying this has bottomed out and all that. So if from that angle you look at it, there are only 3 big sectors that anybody can be in, which is IT, consumer, and financial. And if you're not in IT, you will go in the other 2. If you're not in those, you will come in these 2. Rarely will it be that some other sector has become a 10-15% this thing, because those are too niche, too micro to be that big. So that way we'll always be overweight consumer and financial for some time. And previously we used to be always overweight IT till about 2022.
Samir Arora, before we thank you, where is it that you would be most, constructive on, or a dark horse or whatever? Leave our viewers with something, a key thought around the new Samvat, for the new Samvat.
So first thing is that now that you have 100% disclosure of our portfolio, you can see where disproportionately something is being added, because some is just because you get flows and you buy things, mostly just in proportion, plus minus a few basis points. So from that, it is easy for you to see. I don't have to say, but from my point of view, I've always been saying that if you see our stocks, we don't bet on any one stock to change our life. We believe that if we buy 20 stocks with research and rigor, some X%, which are normally say 10, 12 out of those 20 stocks will do very well. Some will break even relative to market, and some will lose us money or even embarrass us once in a while. But we don't ever precisely know whose turn it is next. Some quick example. So even Zomato, we bought at 52, but not me. The management also did not know that they were going into quick commerce, or that quick commerce will take off so well. If it had not taken off so well, this stock you would have been selling at 80, 90, saying you made 30, 50%. It's the same thing with all these stocks. You really think that we bought Ather, we were Anchor, that we ever in our life dreamt that it'll be a 150% and we'll say, wow, very good. We were going for 25% return. Nobody knows what the market chooses as their love for the next 6-12 months. There are some common theses. One thesis which I've been saying for more than a year is that India is going through a slowdown. There'll be a desperation for anything that grows 30%, because every portfolio manager wants some stocks, one stock, two stock, three stock, which he can dream of, and not just have some other stocks that we have, which are growing 8%, but their P is 12, so they come in the value category, like by power companies. Okay, very boring, but you have them for stability and whatever. So everybody will need one, two. Now you can find your own in whichever way. But there is, in this market where there is shortage of growth, there will be always a demand for high growth, even at something. As long as that growth looks reasonable in other sense, that you can relate it to the market as to why you're getting it on that.
Such a fabulous answer, Samir. Thank you so much for this.
Okay, thank you very much.
And great having you. Happy New Samvat.
Happy.